Let me tell you something uncomfortable. You do not break your trading rules randomly. You break them predictably. It feels random. It feels like a weak moment. It feels like you just slipped. But if we replay your last 10 bad trades, we will see the same emotional setup before every mistake. Not because you lack strategy, not because you lack knowledge. You know your confirmations. You know your risk management. You know your entry model. Yet you still enter early. You still move stop loss. You still revenge trade. Why? Because you have unexamined emotional triggers. You think you need better entries. You think you need a sharper model. You think you need another course. What you actually need is a trigger map. A clear, honest, uncomfortable map of the exact emotional states that make you sabotage your own rules. Today, I am going to show you how to identify exactly what makes you break discipline, even when you know better. And once you see it, you cannot unsee it. Because the problem was never the chart. It was the moment before you clicked. Most traders believe discipline means strong willpower. They believe it means forcing yourself to behave, trying harder, being more serious, watching more psychology videos. They think if they just want it badly enough, they will stop making mistakes. No, discipline is not intensity. Discipline is awareness under pressure. You do not lose discipline at random. You lose it at specific emotional pressure points. When you feel behind, when you feel embarrassed, when you feel impatient, when you feel like you need to recover something. That is when your rules collapse. Not in calm conditions. Not when you are relaxed. Not when the market is slow. You lose discipline when something inside you feels threatened. And if you have never mapped those pressure points, you will keep breaking your rules and blaming the market. You will say, the market manipulated you. You will say liquidity swept you. You will say volatility tricked you. But the market did not make you move your stop loss. The market did not force you to increase lot size. The market did not tell you to enter without confirmation. Your trigger pattern did. The market is not your problem. Your unexamined emotional pattern is. What is a trigger map? So what exactly is a trigger map? A trigger map is your personal psychological blueprint. It is a clear record of the exact situations that cause you to enter too early, revenge trade, over leverage, move your stop loss, skip confirmation, take trades completely outside your plan. It is not about strategy. It is not about market structure. It is not about liquidity or smart money concepts. It is about what happens inside you before you click. Because the truth is this: you do not wake up and randomly decide to sabotage yourself. There is always a buildup. There is always a feeling. There is always a thought. There is always a story you tell yourself in that moment. Your trigger map exposes that story. It answers questions like, what emotional state makes me impatient? What feeling makes me increase risk? What internal discomfort makes me abandon my system? Every trader has emotional tripwires. Some traders are triggered by loss. Some are triggered by missed moves. Some are triggered by comparison. Some are triggered by boredom. Some are triggered by winning. The question is not if you have triggers. The question is, have you identified them? Because if you do not identify them, they will control you invisibly. And invisible patterns are the most dangerous. The 5 major trading triggers. Let us go deeper. These are 5 major triggers that repeatedly cause traders to break their rules. As I explain them, be honest with yourself. The missed move trigger scenario. You analyze the chart. You wait. You hesitate. Then price moves without you. 80 pips, 100 pips. Clean move. You stare at the screen thinking, that was my setup. Immediately, something shifts inside you. You feel behind. You feel slow. You feel like everyone else saw it, except you. And now, the next small pullback looks like opportunity. So, you chase, not because your setup is fully there, not because confirmation has formed, but because your ego cannot handle being left out. Underneath that action is one emotion: fear of being behind. You are not trading the market. You are trading your discomfort. 2. The loss recovery trigger. You take a clean trade. It hits stop loss. It was valid. It was within plan. But now you are red. Your system says stop for the session. Your rules say 1 or 2 trades per day, but your mind says something else. I cannot end red. I need to get it back. I know I can recover this. So you enter again, not from clarity, not from structure, from discomfort. You are not trying to execute your edge. You are trying to escape the feeling of loss. The emotion underneath is simple. You cannot sit with being wrong. And until you learn to sit with loss, you will keep chasing recovery. 3. The social comparison trigger. You open Telegram. You open Instagram. You see screenshots. Someone flipped 200 to 2000. Someone caught the exact top. Someone made your weekly target in 1 day. Suddenly, your steady 1% risk feels slow. Your consistency feels boring. Your growth feels small. So what do? You increase lot size. You take extra setups. You relax your rules. Not because your edge changed, but because your identity feels threatened. You are no longer trading your plan. You are trading your insecurity. The emotion underneath is comparison, and comparison quietly destroys discipline. The boredom trigger market is slow. No clear setup, no volatility, nothing exciting, but you are sitting there staring at the chart. And inside you, restlessness starts building. You feel unproductive. You feel like you should be doing something. So you zoom in to lower timeframes. You convince yourself you see structure. You create opportunity where there is none. You manufacture a trade, not because your system signaled it, but because you are addicted to stimulation. The emotion underneath is boredom, and boredom is dangerous because it feels harmless. But boredom trades slowly drain accounts. The winning high trigger. You hit one clean trade, then another. You are up for the day. Confidence rises. Your posture changes. Your thinking changes. Now you feel sharp. You feel aligned. You feel unstoppable. So on the next setup, you relax slightly. You enter a bit earlier. You increase lot size slightly. You skip one small confirmation because now you trust your instinct more than your rules. The emotion underneath is overconfidence. Dopamine is high. And here is the important truth. Sometimes you break rules after losing. Sometimes you break rules after winning. Both are triggers. Both are emotional pressure points. And until you identify which one controls you the most, you will keep repeating the same cycle with different charts. Why you keep repeating the same mistake? Here is the real reason you keep repeating the same mistake. Because you treat mistakes like events. They are patterns. You say, it was just a bad trade. You say, I just lost focus today. You say, next time, I will control myself. No, you do not need more focus. You need pattern recognition. Every rule break has a sequence. Something happens. You feel something. You believe a thought. You act, but you only focus on the action. You say, I entered too early. You never study what happened before the entry. Every time you break a rule, ask yourself 3 questions. What happened before this? What was I feeling? What thought did I believe? Let us break it down. Missed move. You felt behind. The thought was, I am slow. I always miss opportunities. Then you entered impulsively. That is not random. That is a pattern. Or you lost a trade. You felt irritated. The thought was, I cannot end red. Then you revenge traded. Pattern. Or you saw someone post big profits. You felt small. The thought was, I need to level up fast. Then you increased lot size. Pattern. When you see the same emotional chain happen 5 times, you can no longer call it bad luck. It is predictable, and predictable behavior can be managed, but only if you are honest enough to track it. How to build your trigger map. Now let us make this practical. Here is how you build your trigger map. Step 1. Journal every rule break for 7 days. Not just the trade result, not just the pips. Document the rule you broke. Entered early. Moved stop loss. Took extra trade. Over leveraged. Do not judge it. Do not defend it. Document it. Step 2. Write the emotion present before the decision, not after you lost, before you clicked. Were you anxious, restless, embarrassed, impatient, overconfident, frustrated? This part requires honesty. Step 3. Identify the repeated emotional theme. Is it fear of missing out? Fear of loss? Ego? Impatience? Need for validation? Greed? Comparison? You will start noticing one emotion shows up more than others. That is your primary trigger. Step 4. Create a pre-commitment rule. This is powerful. If I miss a move, I will not enter for 15 minutes. If I lose a trade, I will step away for 30 minutes. If I feel rushed, I will wait for full confirmation on higher time frame. If I win 2 trades, I will stop trading for the day. You are not fighting the trigger in the moment. You are preparing for it before it happens. That is maturity. You build systems around your weakness. The real level up. Here is the deeper truth. The trader who knows strategy, but not their triggers, will always be unstable. They will have good weeks and emotional collapses. They will feel confident one day and chaotic the next, because their emotions are unexamined. But the trader who knows their triggers can trade with containment, not because they do not feel emotions, but because they recognize them early. The market does not control you. Unexamined emotions do. When you know, I tend to break rules when I feel behind, you can catch it in real time. When you know, I increase lot size when I feel insecure, you can pause before acting. When you know, I trade out of boredom when nothing is happening, you can close the chart. This is the real edge. Not prediction, not perfection, self-awareness. Because once you understand your emotional blueprint, you stop being surprised by your own behavior. And that is when stability begins. Let me bring this home. You do not need more indicators. You do not need another entry model. You do not need to change your strategy again. You need more honesty. Honesty about what actually happens inside you when the pressure rises. The goal is not to eliminate emotion. You are human. You will feel fear. You will feel excitement. You will feel frustration. You will feel confidence. The goal is to recognize the emotion before it hijacks your decision, before it turns a clean plan into an impulsive click, before it turns 1 loss into 3, before it turns a good day into regret. The strongest traders are not emotionless. They are aware. They feel the urge and still follow the rule. They feel the discomfort and still close the laptop. They feel the ego rise and still reduce risk. Your trigger map is the bridge between knowing better and doing better. Because most traders know what to do. Very few know what makes them stop doing it. If this video exposed one of your patterns, comment the word trigger. not for engagement, for accountability. Type it because you recognize something in yourself. Type it because you saw the pattern. Awareness is the first level of control. And control is what separates emotional traders from stable ones. This channel is not for traders who want excitement. It is not for traders chasing adrenaline. It is for traders who want emotional stability. It is for traders who want clarity under pressure. If you are ready to trade from awareness instead of reaction, subscribe to the Daily Trader Mindset. We are not building hype here. We are building